Hi everybody, my name is Adam Meyer. I am back with another video, and today I want to go over why I think there's a massive buy opportunity here in stocks and also real estate. It's mainly going to be more towards real estate, but it's going to be also how the Fed is adjusting the interest rates and how people should really understand it and know that you can time the market based on what these interest rates are doing. And that's why I'm so grateful for being 23 years old and being able to experience this and also take advantage of it and also learn from people that are older than me and also more successful, and being open-minded so I can apply these concepts into my own trading and also investing for the long term. So let's get into it here. I'm going to show you a chart here based on interest rates and also the housing prices, because people think you can't time the housing market, but yes, you can. I believe you can. So back here, these are the interest rates from the Federal Reserve. They're 0%, and this is when the money printer was going crazy. This was all during COVID. People were getting the stimulus checks and whatnot, and now we're actually raised up the interest rates. So we're about like over 3 to like 4% right now. We're sitting about 4% for the interest rates right now at the federal level, and they are the ones that give the banks the money, and the banks are the ones that give us the money, which give the companies the money, and we decide if we want to take out the loan based on the interest rates or not. So that's what we see right here. So the money printer was going crazy right here. Now it's at a trickle. So it's just spitting out money like a blown up fire hydrant, and now it's just trickling like a old like faucet sink or whatever, you know what I mean? So that's what's happening. So when these interest rates go up, money's more expensive. So maybe someone doesn't want to go buy a house right now because interest rates are too high. Maybe a company doesn't want to take out a loan because interest rates are too high. Maybe they want to wait until they fall back down and come lower. And that will happen over time once inflation's under control, once people stop buying so much stuff. And that's what draws inflation up in general. So they need people to lose jobs. They need people to start feeling poor because they can always start printing the money again and lower the rates. So they need to get this going. So right now, the housing market, as all this money was getting printed out, the housing market went up, as you can tell here. It was flat right here with the money printer, and the housing market was going crazy. Okay, you can see the timeline there. That's exactly what happened. And now we're starting to see it level off, and the interest rates are going higher. And we are here right now. That's why I'm not buying a house. I'm ready, but I'm not. And I can get a loan. I'm just not buying right now because it's a terrible time to buy, in my opinion. I think we're about to see a trickle over to get a discount, and the interest rates should go a little higher and then maybe fold over. But I want to buy in this trough, and this can be within the next 5 months, 6 months. It can be the next year, next 2 years. It really depends how bad things can get. But right now, I think it's the worst of both worlds of buying a high housing price and also a high interest rate. I think that we're going to see a dip down lower, and there's going to be less demand for housing. And yeah, that's just how I'm thinking that this is going to play out. And this is like my research has showed me, and that's what I'm going to go with. And yeah, so we can also look at stocks here too. When the Federal Reserve decides to start to say, okay, we're going to ease off, our numbers from economic data are showing that inflation is coming down. That's when this is going to happen. So stocks will start to rise like early, but real estate will still fall down a little bit more because it's more of like a lagging asset class. So we got to keep that in mind. We can also go over here to some statistics. We can look up homes for sale, the statistic that has been out just like for search terms. Like if you want to go buy a house, you're going to look this up. So this is what it's been the last 5 years, but we go to the past 12 months is actually what's important here. So 100 represents, so if you look here, here's 99. 100 represents the top within the past 12 months of the amount of homes being sold. This was in March. And now we go all the way down to now, which is 71 here in November. So that's what we're seeing here. This is all the way at the top, 99 in March, and then we go down here, it's at 71. So it's about 0.25% of searches have gone down for homes for sale. Like I just said, high interest rate, high housing price, people are gonna say, maybe I don't need to buy a house. Maybe I could rent for 12 more months so I can then buy a better deal in like 12 months. So the best time to buy a house is not now. I've heard people say that, and that's just not. You gotta do your research, you gotta understand these trends, and that's what I see. This is another thing to actually be scared of too. Just keep it in mind. You don't have to be scared of it, but just keep it in mind. It's a good statistic to know. Credit card debt, all-time high. Look at that. Most people don't know that. Credit card debt, all-time high. And why do people have credit card debt? Like, I don't know. It's just, things are expensive. Just try not to buy things you don't need. If you don't have the money, don't buy it. If you know you can't buy it, do not buy it. Because people just feel rich right now and they go, oh, I got my job. But then the Fed is trying to get people to lose their job. When people lose their job, they're going to start feeling poor. Also, look at the savings rate here. It's the lowest it's been in a while. Like, it's way down. Like, we go way out here to like 1970. We're like way down to those levels of savings rates. So it's way down there, and credit card debt is way high. You can even zoom this one out too. Zoom this one out, way out here, go up to where it is now. We're way up here, way up here. That's just crazy. So it's just something to keep in mind. And here's the Federal Reserve, what they're doing with interest rates. See how we were down here all through 2020? It was all down here at 0, and now we're starting to work our way back up. We're working our way back up in there. So this is where the money printer was going, and now they're making money more expensive, and we're starting to get up there. We just do not want to see this. We want to see them get it under control. We do not want to see this that happened here in the 80s, and that completely killed the economy when they rose interest rates up to about like almost 20% or so. That was completely wild. To wrap this video all up, we can look for lower prices in the stock market and also the housing market. At least that's what I'm doing. I'm not a financial advisor, but I'm looking to get a good deal so I can ride this up into the future, and I'm just going to continue to learn. And like that's what I hope that you guys do too, because this is an opportunity of a lifetime. Like the most millionaires are made in a recession. That's what we can do. Find out how to get more money. Is it starting a business, another side hustle? Is it looking more into stocks and just continue learning? But I think getting another job, starting a side hustle, learning, doing all of it as much as you can. We were driving in the car listening to a podcast on how to make extra money. Do you go buy a table, fix it up, and then resell it, or pick up something free on the side of the road and then resell it for like 50 bucks? Maybe that's a little bit. That's another $50 that can go into a stock if you think about it. You can put it in a Tesla, and then 3 years from now, it's like triple the price. So like that 50 bucks is now more than what it is when you first got it from just selling the table you found on the side of the road. You know what I mean? So just finding ways to make a little bit of extra money can actually make out big time in the future. But this is the time. It's time to buy like when it's lower. Well, time to get money when it's lower. That's how I'm looking at it. So take care, everybody. Love y'all. Let me know if you have any questions.